throughout the situation. Of course, they were hammered by the slowdown in credit growth sales, particularly in credit growth revenue, should I say, of the banking stocks. And now perhaps reaping some sort of benefit with some sort of stability coming to the fore. The regulator of the Prudential Authority, or the CEO of the Prudential Authority, Kuben Naidu there, indeed even saying then that banks need to be a little bit more cautious, however, as they try to find some optimism in the market, purely based on the fact that things like vaccination rollouts are beginning to happen, so markets are beginning perhaps to find some sort of ground now as well. But what has that meant for the market overall? Generally, we're seeing a whole lot of red, perhaps some profit taking of late as well. Markets not really finding solid ground overall, as investors try to find a way to plug into some sort of positivity. And of course, with markets having run hard of late, it does mean that investors perhaps a little bit wary of getting into this market, whether it be on the advanced or market, or even on the emerging market side, like our very own. So you're seeing a mixed picture out in Asia early this morning, red all across Europe, then 1 1/3% weaker even for the DAX out in Germany. It's 185% lost points lost out on that front. Even on the local bourse, we're now sitting at 66,435 points. We're 1 1/3% weaker overall. So certainly a whole host of weakness coming to the fore. Industrials are a big loser there, nearly 2% lost out here. A lot of that coming from here then. It does seem investors shying away from the tech stocks that certainly were the big gainers out in 2020, and perhaps trying to recalibrate the likes of Apple, Microsoft, Alphabet, Tesla, all of those perhaps losing some headway yesterday out in the United States, and that has filtered through into this trading today. Banking stocks also losing out 2%. That does mean financials are down overall, and again a red day across the industrials, the resources sector, should I say, as that went down 0.75%. We do have a few companies having gone up though, nothing too major. The likes of Hammerson, Brait, as well as Capital and Counties, all rising quite prodigiously, I might add. But on the downside, the likes of Grindrod are big losers, nearly 5% lost there. Murray and Roberts Holdings as well, 4.65% lost on the company side there. So big losses, unfortunately, on this side. Onto the commodity side then, Brent crude oil is headed up 0.75% better off. It does seem that despite the fact that there has been a return to some sort of production out in Texas, the market hasn't necessarily seen that come on board as quickly as they perhaps would have liked then as well. So that price would have gone down in that aspect, but now still rising 0.75% to the good there. Platinum and gold both going down. Big fall for platinum though. It's more than 2% weaker at $1,245 a fine ounce there. And the currencies were slightly weaker again today, unfortunately. No risk on trading at present, perhaps going for the safety of the more known currencies. We're 14 Rand 70 against the US dollar. Euro will set you back 17 Rand and 86 cents, 20.70 then for British pound. Look at that. Big fall then. The biggest fall in a month for Bitcoin, nearly 15% lost in this current trading picture, having traded at nearly $56,000 US dollars for a Bitcoin. We're now nearly $10,000 less, sitting at 46,600 odd against for a single Bitcoin. So some massive movements across that board if you know what you're doing there. Chantel Marks from FNB Wealth and Investments joins us now to get a grip of this market picture. Chantel, perhaps let's begin things where I perhaps ended off a little bit with the commodities trading there. It seems that now investors are still asking themselves whether that commodity super cycle is still in play. Do you think there's some nervousness around?
Yeah, there's definitely some nervousness, but I think that there's just general jitteriness in the market, and a lot of it has to do with this inflation fear that's on the horizon at the moment. I do not think that the new commodity super cycle is really coming to an end anytime soon. And I mean, the main reason is just that we don't have new supply coming online, but we have pretty strong economic growth globally anticipated for the next 2 or 3 years. So just that supply demand imbalance should provide longer term support for commodity prices. But of course, there are commodities and they do tend to be quite volatile. So from time to time, you could see some short term weakness in any of the metals that we look at, and soft commodities as well.
Yeah, look, the PGM space has certainly been one to look at, particularly over the last year. It's bode well for Anglo American Platinum yesterday, and now it seems like Kumba Iron Ore reaping some sort of benefits as well, by the looks of things.
Yes, Kumba released a very strong set of results earlier this morning. And it's not surprising if you consider that the realized iron ore price that they received was $115 a ton, but their cost of production is only $31 a ton. So they are absolutely printing cash at the moment. There was some once-off costs in that number relating to COVID-19 and a couple of other things, which resulted in cash flows probably being a little bit lighter than expected. That filtered through to the dividend, but I don't think it's anything to be overly concerned about right now.
Yeah, okay. Well, certainly interesting out on that front. We also, still in equity news, also saw Discovery come out with a trading update. They've lost around 5,000 members as well with regards to their medical aid, according to the CEO. Their operating performance, seeing normalized operations expected to rise between 17 and 21%. They're seeing their shares even gain almost 4% even at some stage, warning of an up to 15% decline in half-year profits. Is this a little bit better than expected?
Yeah, so the underlying operational performance, or what they call profits from operations, that guidance was ahead of expectations. But the bottom line number, so the headline earnings per share number or net profit number, was slightly below expectations. That would suggest that there was an increase in finance costs. I think it was expected to a certain degree, but there is a bit of an impasse there in terms of which figure investors will weigh up more. At this point in time, it does look like the profits from operations figure is the one that the market really likes. And then you mentioned lapse rates, but if you actually look at what lapse rates are usually, it's not much larger than anticipated, and it definitely is, or it's not much larger than usual, and it definitely is lower than what the market was expecting. I mean, these guys made huge provisions for lapses, and that didn't necessarily materialize. What did materialize, though, was that there were quite a bit of COVID-19 related claims that came through. That was slightly larger than expected, but it seems as if these two factors, or these two kind of sets of provisions that were put together by the company a few months ago kind of evened one another out. And it does look as if they are still doing quite well despite the very pressured economic environment in which they're operating at the moment.
Yeah, the interim results will then be released on the 25th of February. That's on Thursday, of course, then. And that's for the 6-month period to the 31st of December 2020. Let's shift our attention a little bit then, Chantal, if you will, to a little bit of economic news. One that's very important, of course, the budget coming up tomorrow. The finance minister said to deliver that one. Debt to GDP is always the first figure we sort of look at. Revenue collections are expected to be down, even though perhaps there was a small bump up for the last quarter of the year. But is there anything untoward that you expect here? Anything that you perhaps would like the finance minister to even be honing in on, especially when it comes to things like reforms?
Yeah, absolutely. I think that's exactly what I want the finance minister to focus on. We know that revenue is going to be slightly better than expected. We know that expenses were kind of maintained at the same level as what was planned at the MTBPS. But we also know that debt continues to rise. And we know that the only way that governments and Treasury is going to get itself out of this is to do something about the very benign pace of economic growth in South Africa. And in order to stimulate economic growth, you are going to need structural reforms. And I think that one of the most important things that perhaps Treasury can kind of drive home to the rest of government is to make it a lot easier to do business in South Africa, because we have a massive underinvestment in the economy at the moment by the public sector because they have no money, and also by the private sector, which does have capacity to invest. But you cannot do it without the confidence that you will get a return on that investment. So I think one of the key issues is going to be electricity liquidity, that's going to be a major issue. And then just generally making conditions a little bit easier to do business. So removing some of the massive red tape that business and most importantly, entrepreneurs have to deal with.
Yeah, the starting point may indeed be confidence. Chantel Marks, appreciate the time. Always good chatting to you here on SABC News. Chantel Marks then joining us from FNB Wealth and Investment, getting us to grips with not just the markets, but certainly even tomorrow's budget. We will, of course, have that for you live here on SABC News. My colleague Nzinga Qundi